Hey, what's going guys? I want to talk a bit about in terms of how to use MACD, the moving average conversion divergence. How to use MACDs. Do you trade stocks or any other financial markets you're trading, whether it's equities, options, right? Doesn't really matter what it is. How to use MACD for an edge. Now we might need to talk about MACD. I'm not talking about McDonald's. I'm talking about MACD, which is the moving average convergence divergence, right? So generally it is an oscillator, so it has two moving averages in there, which is try to help you with finding the trend following and momentum. So the two moving averages that is most commonly used is the 12 and the 26-day moving average, right? So if we take a look at this 12-26 line, what it really means, the 12 is a faster moving line and 26 is a slower one, right? So 12 EMA is going to be the moving average of the last 12 candles, and the slower one, the 26, is the last 26 candles, whichever time frame you are looking at, right? So those are the most common ones: 12, 26, and 9. I mean, if you want to do it faster, you could, but generally individuals use it for the whatever the set parameters. So with MACD, it's being used for convergence and divergence, as the name suggests. So conversion occurs when moving averages move towards each other, and divergence happens when they are moving away from each other in different directions, right? Upside momentum really is when you have these histogram bars in the upside, means market is most likely going to go on the upside. When you have market even either going on the downside or it is actually going sideways or downside, then most scenarios you will have these histograms on the downside, right? So that's one way to use it. In terms of signal lines crossover, if you're looking for MACDs, once you see this fast line go over the slow line, means you want to be looking only for a long bias. And when you see this crossover again with a slow one, you want to either be cautious, right? Either be cautious or maybe initiate some short positions and with the risk, right? So you want to see in terms of, so as long as the faster line is above the slower line, you want to be looking for long positions. When you have the faster line below the slower line, then you want to be looking for short positions. In terms of divergence, right? That's what is generally being used, whether it's for convergence and divergence. So with MACDs, well, divergence really is that the price, right? The price is moving. Generally, when you talk of trend, we talk of higher highs and higher lows, right? So if you look at this situation, let's try to see on here. I mean, you have this high over here, right? Let's try to see. I'm trying to draw this properly over here. So you have this high over here. The next high is over here, and the first low is over here. The next low is over here. So I mean, yes, the trend is moving in the right direction. But what you really see on here is in this situation where the highs is here, right? But the price tries to go again at the higher, but the MACD doesn't confirm. So that's a divergence, which is price is going higher, right? However, there is no momentum. Right? Now, just because there is no momentum doesn't mean that you go and start shorting the stock, right? What it really means, you need to get some confirmations. So if you went through the support resistance videos that I made, go through, look at it again, and you want to see these divergences happening near some resistance regions, maybe on a higher time frame, right? So if you're trading on, say, an hourly chart, you want to maybe look at the 4-hour chart or the daily chart to see if there's any resistance areas. If there isn't any resistance areas on the daily chart, then sure, then you know what, if you see this divergence, you see a reversal candle, yeah, you can go and try to make a short position out of it, right? So there could be bullish divergence as well. Bullish divergence really is when the price is actually trending down. However, there is no momentum in it, right? So you see this price over here, somewhere around 57, then it goes lower somewhere around 56.50, 75, whatever it is. But you see there's no momentum with the price, right? If you see these ones where the price actually drops and drops, there is actually a downside momentum, right? But in this one, there is no momentum. There's price is actually saying that, hey, you know what, maybe there is not enough sellers in there. So once again, you don't want to just go and take it just because there's a divergence on there. You want to see that it is actually going into support. So maybe $57 a round number, and a higher time frame there is a support on there. If there's a situation, then yes, maybe you can go and take a long position based on the smaller time frames that's going on. Same thing with eBay. When you go from price divergence, which is price going lower, but you see this MACD is actually going higher, right? So in this situation, I mean, if you look at this, you really want to start to take long positions. Once again, if this is actually $37 somewhere to support. Bearish divergence is the reverse. I mean, if you have price which is going higher, but the momentum is not there, right? So something like this, where the price is actually going higher, but there is no momentum in it, right? So generally, when you have price going higher, you want to see the moving averages, the MACD line is actually going higher, right? In this situation, you see the price going higher, but the momentum is actually not there, right? Because keep in mind, these are average of the last 12 and 26-day moving averages, right? So there is no momentum in there. Once again, if you look at the bearish ones, I mean, the price is trying to chug along, but hey, keep in mind, once again, just because you see a divergence doesn't mean you start shorting the stock. You actually want to see if it's actually coming to resistance or something like that, and then based on the fact, you want to go and make some bearish bets. One more example on Baidu, where the price is actually going up and there's no divergence on here, right? So something like, let me pull up the name Baidu on here, right? So let's take an example. So let's see, we're looking at Baidu, which is on daily chart, had this big gap down. So just based on this, there's a gap resistance over here, right? Somewhere around this 262 region over here. I mean, the price gap down and had this big push, $20 push. Now it's capping into resistance. So, hey, now we know, hey, you know what? Now this is the resistance level. Now if you look at the shorter time frame, and now the 250s, 260s was the region. Now, I mean, hey, now we're seeing an overshoot of price. But hey, you know what? On the shorter time frame, we don't see no momentum over here. So that's the reason why if you take a short, you get a quick, nice $8 short over here, right? So that's how you combine the higher time frames and you go to lower time frames for price confirmation. So that's again for BSUN. You can do the same thing, right? The price trending higher, but momentum is waning down. So with BSUN, it's been a really strong stock. So let's see if you look on the daily chart. This strong name, there is no resistance over here. So that's why if you take a look at this one and you say, hey, you know what? There is a price is going higher, but in this one, the momentum is kind of waning down. If you try to go and short it, chances are you won't, I mean, you'll make some decent money on here, but you really don't know where it's actually you want to go short it, right? I mean, it can still going higher and can keep on waning down. The best case really is you want a price to come into resistance or support and try to find divergence over there. So just a quick recap, we use it for convergence purposes. So if there's a crossover to the upside, the faster line, the 12-day moving average crossing the 26-day moving average, you want to be looking on the long side, right, in this situation. In other words, if you're looking for short, you want, if there is a 12 crosses over the 26, you want to do short. And the other one is divergence, which is it's not an automatic buy or sell. What you really want is the price to come into those areas or support or resistance and find divergence over there and then take a position based on your risk parameters. Hopefully you guys like the video. Please like and subscribe. Keep you motivated to make more videos for you guys.